And with just 24 hours until we hear from the Fed, that is where we're going to start today. So what will the Fed do and when will they do it? The latest CNBC survey showing the economists, strategists, and fund managers polled expect 3 rate cuts this year, with the first coming in June. Our next guest is in that 3-cut camp, but with a possibility of only 2. Let's bring in Stephen Stanley, Chief. You just saw him come in there, didn't you? You saw him shadow. You saw the shadow of Stephen Stanley, Chief Economist with Santander. Welcome, Stephen. Good to have you with us. Nice entrance.
Thank you.
Really well
Smooth,
done. Smooth, really
That
good.
was like a soft landing,
That was
I
a
feel
soft
like.
landing.
There we go.
Are we going to have a soft landing?
Just giving you a little illustration.
Yeah, that's how you do it. We're going to have one?
I think so, yeah. It looks like the Fed, so far, so good. I mean, I think we still have a ways to go on inflation. So it's too soon to declare victory, but I don't think we're going to have a recession.
And where were you a year ago? Were you in the camp that believed that a recession was likely either in 23 or in 24? And have you changed?
No, I was always a soft landing guy. I think I would say...
You strike me as a harder landing kind of guy.
I think I would say that we've had better luck with inflation than I thought. I thought inflation might be even higher than what we've seen. Of course, as I said, we've still got a ways to go, but I think the Fed's made a lot of ground on that front.
Do you think the Fed is going to cut rates aggressively this year or modestly this year? In other words, I would call 3 or more cuts aggressive, fewer than 3 modestly.
Yeah, so I think their plan is probably still going to be 3. You know, when we get the dot projections tomorrow, I think that they're going to stick at 3 for the year. I actually... I have them moving later than where most people think. I don't think they get started until November. So I only have 2 this year, but then, quite a number next year. I think they will cut pretty steadily next year.
Do you think that those cuts coincide with potentially a reduction in their quantitative tightening program in terms of just the magnitude by which they're rolling off that balance sheet?
Yeah, I think if it does, it'll be a coincidence. I think that they're trying to run those 2 on separate tracks. They've said it's very possible that they could continue to cut the balance sheet at the same time that they're easing, even though those 2 things seem to be at odds with each other. So I think the balance sheet will be determined by their view about how much, where bank reserves are relative to where they need to be. And as long as there's excess liquidity in the system, I think they'll keep going with quantitative tightening.
How much do other forms of credit versus the traditional banking system play into that? I ask because coinciding with this tightening campaign, we've seen this huge rise in private credit. Does that kind of do a disservice to the efforts that they are making in terms of quantitative tightening?
Well, I think it makes the Fed's job a lot harder. And I guess in some ways it's not altogether surprising that, we saw a big crackdown in terms of banking regulation after the financial crisis, as you would expect. And what happens, more of the credit universe has moved outside of that tight regulatory environment.
Are you worried at all? You said earlier that inflation has come down maybe more pleasantly than you had expected initially. Are you at all worried about some of the recent inflation numbers that indicate maybe it's not a straight line down to 2%? Yeah,
I think people got a little ahead of themselves, or a lot of people did, in terms of inflation. We did have some low numbers in the core inflation figures late last year. I think what we're seeing is more of a normalization to where the trend is. I think the trend is probably, 3.5, and on its way down. But we maybe felt like we were, I think people got a little ahead of where we actually were last year.
Do you think corporate profits are going to be strong enough to support a market that may not have the aggressive rate cuts that some had anticipated?
Yeah, I mean, that's been the big surprise, right? The economy has done very well.
Yep.
Very good economic performance last year, and that's been accompanied by solid profits. So every quarter, equity analysts get worried about the earnings numbers, and then the earnings always seem to exceed expectations. So,
Stephen, thank you very much. That's great. Appreciate it. Stephen Stanley. He's a soft landing guy.
Both metaphorically and physically.